So you have this piece of price action and you are struggling to decide which zone to trust on the M1 time frame. Do you often find yourself getting whipsawed out of trades only to see the market move in your direction? So the first zone fails, you take the second zone and it fails again, and then now when you don't want to trade anymore, they move in your favor. In this video, I'm going to show you a powerful technique using the M5 time frame or higher to filter out the noise and zero in on the most reliable zones, whether you're trading the moneymaker setup or DTFX zones. Stick around to learn how to refine your entries and improve your win rate. But before we dive in, I want to give a big shout out to Dino. He just received his first payout using only the moneymaker setup. Congrats again, Dino. Your dedication is paying off. Before we get into today's topic, I want to remind you that everything I do is completely free. No paid services, no hidden fees. I'm here to help you succeed in trading without spending a dime. Our Discord community is almost 2,000 members strong, filled with very good vibes and zero drama. We're all committed to success, and you can be a part of it. The link to join is in the pinned comment below, so join us, it's all free. Now, back to our video. Imagine this is the M1 chart. So the expectations, or what they teach you, is that we will start doing higher highs, respecting the 50% of each zone going up, and by price closing above this higher time frame high, we will get this higher time frame zone, right? So what they teach you is here, price will break structure, will use something in here just to mitigate this first bearish zone, and then they will start bearish order flow just to go and mitigate this higher time frame zone. And then when they mitigate something that will be unmitigated in here, they will flip back bullish, then go back to the 50% and keep going up, right? So what they teach you is that you can trade this all going back to this zone, and then you can trade out of the zone. So by having this in mind, you will start thinking that now you can trade this moneymaker zone here, and you can trade this one in here because you think it's still bullish, and this will be your first loss, the second loss, and you will think that this will be another win, right? Just for them to take you again, and then they will resume going higher. Now the reality and what market usually do is they go up and leave in lots of unmitigated zones, and then when they break structure, price will accelerate through all the unmitigated zones just for them to mitigate something in here. They will flip to a bullish structure, and then they will go up, leaving you with a lot of losses in here. And then when they are finally flipping back bullish, you are done with trading because you got lots of unfortunate losses before the real move. Now don't worry, I have fixes for you, easy fixes actually. So the first solution is to go up time frames till you see one valid zone, then price will come back to it and you will take the trade from the 50% of that higher time frame valid zone and take the 1-to-1 or target the week high if you are sure market structure is bullish. Solution number 2 is to go up to a time frame and locate your higher time frame zone, and then drop back to your trading time frame and wait for this flip at the 50% minimum of the higher time frame zone, and then take the 1-to-1 from this flip or target again the week high if you're sure market structure is still bullish. Now the problem in here is that this solution is lower probability because most of the times price will usually wick this flip to take more liquidity, and then they will go up. So the easiest solution, if you want to make sure this flip is happening, right? So you can take it from this 50%, but your stop will need to stay under the low of the protected higher time frame zone. Okay? We will either take the 1-to-1 or target the week high again. Another problem that happens with the flip And why I don't like to wait for flips to happen is that they usually will respect something in here that liquidate this last high, and they will never give you the 50% of this zone. So they will just mitigate it and run. And sometimes they won't even tag you or touch anything in here. They will just run to TP. So we will end up missing a trade and losing all that time waiting for it to happen, just for it to go without you. And that actually can end up hurting your emotions, which can negatively impact your next trade. Now, let me show you some real life examples. So price here created this huge zone, then it created new zones, never mitigate it 50%, create another zone, never mitigate the 50%, and now here you find yourself here, right? And you will ask yourself which of these zones you will have to take. Now the first solution is to go up time frames, so you can find one valid higher time frame zone that price will 100% respect, because most of these zones will be accumulation for this A++ moneymaker setup, but unfortunately sometimes the accumulation is made of valid zones. So you think now because these zones are valid you can trade them, and this is why I gave you guys the rule of never taking or trusting a valid zone when we have lots of valid zones under. So what we do is we go to M5 in this case, and you'll find that we have just one valid pullback, and then we closed and we were accumulating and displacing above this zone, right? So when price will change the state of delivery, and by changing the state of delivery, I mean closing under this last down candle that caused this last high. So the change of state of delivery is nothing but a close under this bearish candle. So when the change of state of delivery happen, price will become bearish in lower time frame, just for it to reach and mitigate here, and then they will change the state of delivery again to go up. So now that they closed under this last order block, they changed the state of delivery, and you are not interested in taking bullish trade in lower time. So when we go back to M1, we now know that these zones are not going to hold because price already flipped back bearish. They mitigate this unicorn setup, and now they are reaching somewhere lower. So how do we trade it? Solution number one is we put the limit at this 50% of the higher time frame zone, and we take either the 1-to-1 for a fast trade, or we can target the week high. So let's see. So we're tagged in and we got the 1-to-1 in one candle. If you are greedy, they just fell before giving you your first TP, played with you a bit, then they went to full TP. Solution number two, and is to wait for a flip to happen in here. So you mark out the 50% of this zone and you enter the 1-to-1 here. Take this 1-to-1 if you trust the flip, or you can target the week high. Now, if you want to be extra careful, you can take your stop loss at the low of the higher time frame zone, and you can take a 1-to-1 again, or just like before, target the week high. Now this is a trade I took. I waited for price to come back to this zone, and I went down to the 15-second, and what I saw is this glitch zone, right? So I knew this glitch zone will give me at least a 1-to-1 before they can make it back to bearish. I was not sure about what price is doing, so I went down to the 15-second, right? Instead of taking the 1-to-1 of the M1 zone, I just took a quick 1-to-1 of the glitch. Now this is again another tip of how to get a higher win rate, right? So you take it from a lower time frame glitch, 50%, and you either target the 1-to-1 of the M1 zone for a 1.8 RR, or target the next week high or next bearish 50% of this zone, because look, this zone gave the reaction at this 50%, and they could have come down. So you could have targeted just the low of this zone, right? Because you don't know what price can do, and take a quick 2.68 trade. But we know at M5 that we were bullish, so you can also target the week high of the M5 for a 5-hour trade. So here in this screen, you can see the execution of this trade I took from this glitch, following the same logic. Okay. Now you can use this concept also to have an idea of what's happening on the higher time frame. So for example, lots of traders were thinking that those zones will give reactions, and they kept taking losses because these were 15-minute zones or 12-minute zones, and they were higher time frame zones, right? But the moment you see lots of zones left unmitigated, just try to go to the higher time frame. In this case, I would choose the 1 hour, right? And you will see that those zones are not on the 1 hour, but you will see instead that price reacted from something in here, and it will give at least a 1-to-1, right? But the more important thing is that this is now the bearish zone you can take shorts from, if you're bearish, of course, right? So none of these zones on the 15-minute will hold. Why? Because price will seek the higher time frame zone, because when they leave the unmitigated zones, those will be usually the trap for the mother higher time frame zone, right? So just wait for the price to go mitigate the 50% of this higher time frame zone, or just try to place structure here in the lower time frame. The structure in the lower time frame here will be a bit tricky because it's a retracement to the original 50%. So the retracements are usually hard to trade. Why? Because sometimes they will treat it as a ranging profile, and they can keep taking highs and lows before they go mitigate the 50%. Okay? So here they did also a fake flip for the guys that were waiting for the price to come back bearish from here. And what happened at news that day, they just mitigated the 50%, and now they started falling, right? Now that they did the real flip, they came back to mitigate this original mother zone. Now, if we drop to the 1 minute, you will see the same thing, right? So they left this unmitigated zone just under the mother flip on the lower time frame. That's why they usually do that MSS pattern I told you about. It's just to fulfill the higher time frame move. So here they already mitigated this 50% fall, but when they were here, this never closed under the 50% zone. So this was just a wick, but now they closed. So now that they closed, they will go back and take this as internal liquidity. So you can just set your limit just above this high and take the trade for a higher win rate, or just take it from the 50% of the zone. So this is what always happens. So this is now the first tap, or the SBS Stoic tap. It will be liquidated as an internal liquidity for this higher time frame range. But if you stayed on M1, you will not know what's happening, right? So just try to understand these concepts because they will help you a lot. Now, after they closed again under this low, right? So they created another bearish zone in here. Okay, so before taking this bearish zone, please go and check on the higher time frame what's happening, right? So when you go to the higher time frame, you will see that this zone is not even valid, and it looks like just accumulation for this higher time frame zone. Okay, so when this happens, now you have two choices. Okay, so because I now see that the liquidity is here, and I see that we have this fair value gap in here, I will most likely trust the golden bullet fib. Okay, so this is the fair value gap at the EQ, right? So I'm either taking it from the 50% of this golden bullet, or if I'm greedy, I'll wait for the golden entry. So what happened is they took the liquidity. Okay, so this was failed 15-minute zones, right? So this is the way you could have saved yourself from these losses, right? Will they mitigate the golden entry? Not at all. So they just came to the EQ, fair value gap at EQ, and they fallen. So you're not obliged to take these trades from the EQ, okay? But this is just a way of how to spot these fake zones and never be victim of them again. So before you take your trade and you have lots of unmitigated zones left, just make sure you go to a higher time frame just to understand what the higher time frame is saying. Now again, and after they closed under now this low, right? So I was talking to the guys in the Discord, and they were again waiting for price to come to this 12-minute zone because they were trading on the 12-minute. So for me, it's the 15-minute. And I just told them, don't take shorts in these zones. Why? Because in the 1 hour, this is nothing but first stop of this bearish zone. Okay? So what happened is price never respected this zone. So I kept taking longs in here in the 5 seconds, right? And price now is maybe respecting this zone and giving the 1-to-1, right? Or it reacted from this 50% and is now maybe bullish. So we will see what's happening in here in the lower time frame to have more information, or just let price decide what to do in here. Then we will trade when we have more story. Now what I see here now again is that we had this unmitigated zone here, right? And we also had this unmitigated zone here, right? So maybe let's go to a even higher time frame, like 4 hours. And here, so this actually closed only 4 hour, but this looked just a tap for this zone, right? So maybe now this zone is also a trap on the higher time frame. Okay, so maybe we are reaching for this 50% now, and then we will resume bullish if we are still bullish. Okay, so that's a way for you to know when you have lots of left unmitigated zones, right? So just go to the higher time frame and keep going high to understand the full story, so you don't keep falling victim for this higher time frame moves that looks like valid trades in the lower time frame. Okay, so as you can see now, this zone, the hourly zone, just gave the 1-to-1, while those 15-minute zones, the unmitigated ones, were just traps. Okay, so this happened just after I was explaining, just to see how powerful this can be. Okay, so maybe we will react from this zone, and then we will go back to the 4 hour zone, because now we created lots of smooth liquidity. Price can take easily, then fall again if they are still bearish. Now I really think that this is why price action was a little bit hard for the M1 this week, and the reason why was so simple. So whenever you are facing lots of problems on the lower time frame, just zoom out and try to understand the real moves. So just try to understand in which time frame they are choosing to trade, because sometimes they like to hide what they're doing in a certain time frame. So you just keep zooming out till you understand the story. Okay? As you can see from today's examples, moving to a higher time frame can really help you avoid those trap zones when the smaller time frame isn't behaving as expected. If you want to master the moneymaker setup, just click on the playlist that's now on your screen. Remember to subscribe for more content like this. Give the video a thumbs up if you found it helpful, and join our free Discord community. We're 2,000 members strong, and it's all about good vibes and success. Thanks for watching, and I'll catch you in the next video. Ciao ciao.